Gold and silver both are getting back in action. So let's discuss how should we approach them from here. If you see the chart, gold has already broken its resistance and then we saw a sell candle, and now price is again trying to move beyond the red candle. If it is able to move above, it can move all the way back to the previous high of around $5597. Then we need to see how price reacts at that level. Now, quick disclaimer, this is not a recommendation. Always invest after consulting your financial advisor. From a trading point of view, gold is actually well set up for commodity traders now. Now let's zoom out a bit. Globally, the structure is shifting. This was discussed in the Global Economic Forum as well. De-dollarization is slowly taking shape, and in that kind of environment, gold and silver becomes a natural hedge. Add to that the recent tariff chaos. Trump has again said that if countries don't follow his tariffs, he will impose even higher tariffs. Now that has increased uncertainty, and whenever uncertainty rises, gold tends to move up. On top of that, central banks across the world are continuously buying gold. So in the long term, as long as there is uncertainty around the US dollar, gold remains supported because central banks are unlikely to stop buying. Now, coming to silver, silver is approaching its previous resistance, the one formed after the last bounce. From here, the reaction matters. If silver closes above resistance and holds, we should see a move towards its all-time high, but this may take some time and it doesn't have to be fast. If it fails to hold, we might see consolidation in the same zone. One more important point on silver, there are increasing talks about supply shortages on COMEX. Investment specialist Carol Merks recently said COMEX will be out of silver by February 27, and from April onwards, the market risks a physical shortage unless meaningful inflows come in. That's why structurally, silver can show a stronger move ahead. For long-term investors, the approach is simple. Buy on dips could be a strategy in both gold and silver following your allocation. The overall metals rally still looks intact because global uncertainty hasn't gone away. Lump sum should not be done during the run-up. For that, you should wait for some meaningful correction.